Good morning, everybody. Happy Monday. Today is Monday, March 27th. Hopefully, you'll had a good weekend. Let me minimize myself so we can focus on the charts. Currently, markets are up this morning with QQQ at 311.50. SPY is currently at 398.19. We're getting close to that 399 mark again that we were focused on with the Fed meeting. And then for IWM, the Russell 2000, currently we're at 174.10. So seems like we kind of melted up over the weekend, hence the live session and the name of it. So, and then the fundamentals, we're looking at the 10-year going up to 3.5. So this is a gap up from Friday's close from 3.376 to 3.5 currently, and this one looks like it still could be headed up. Oil is recovering 2% this morning at $70.60 a barrel, so that is good in terms of recession indicator. So whenever oil is going down, that's usually signs that a recession is coming. So with oil being up 2% today, that would be a positive for that. And then we have TLT currently going down at 105. Let's check the other fundamentals. The 2-year yield is currently 3.9635, up 0.18 this morning. So people are selling out of bonds, pushing the rates up. And then finally, the 210 spread is currently at negative 0.47. So that's a pretty decent pullback. It was at negative 0.35. Now it's managed to come back down to 0.47 in the negative. So seems like could be recession off sentiment today. So the continuation of this green move may continue based on that. Let me see if there's any news that we should know of this morning. EBA chef warns about big risks in financial system. Ferrari CEO, self-driving car is not for Ferrari. Treasury yields extend their climb. Russia helping Iran with advanced digital surveillance. Moscow had resisted but decided to move ahead. Some more geopolitical news. Binance expands its NFT artificial intelligence service, Picasso, globally. Let's see. And it looks like the banks are up pretty major this morning. So let's check KRE. Currently up 3.5%. XLF is up by 1.8%. And if we look at the most important names, FRC up 27% this morning. This one's just all over the place. Currently trading at 1577. And then a couple other ones. Western Alliance, WAL, is up 6%. Then if we look at the big names, JP Morgan up 1.9%. Bank of America 3.5% up today. So banks are finally catching a little bit of love in the assumption that we're not going to have any more bank failures, which is also kind of helping us with our recession fears that we've been having the last couple of weeks. But yeah, good morning, Radek. Good morning, Al-Qaeda's Irfan. Nice Fishman. Good morning, Donald. The VIX is down 2% today, 2.1%. Checking out the VVIX, or the volatility of the VIX, it's still at 97. So this is still elevated from where it was before this whole banking crisis started. So as long as this stays elevated, I'm not too worried about our UVIXY position until this maybe slips below like 90 then I might start to worry about it. But currently at 97, and then it started before the banking crisis at 73.60. So still up a ways, and as long as volatility is volatile, then there's the chance that it does end up, VIX ends up recovering back to where I need in order to take profits for UVIXY. Good morning, Z. All right, and then the two stocks that I have on my watch list for earnings this week is going to be Lulu and Micron. Lulu is reporting earnings on the 28th, so that'll be tomorrow. And then Micron, I think they're reporting on the same day. I think they're also reporting on Tuesday. Both of them after hours. So if we go to my Notion notes, from yesterday's video, if Lulu ends up beating earnings, beating revenue, that would leave their stock above 320. If they beat earnings, miss revenue, that's 310. If they miss earnings, miss revenue, it's below 290, and then miss revenue, beat earnings is 305. So what's the most likely scenario for Lulu is the question. I would say we could use Nike as a proxy, but I feel like Nike is more of a discount brand, especially compared to Lululemon, who sells $100 leggings. I think that Lulu is probably going to end up missing, at least on their revenue. I'm not sure for their earnings on the other hand. Their last earnings was $567. And Wall Street is now expecting them to do $425. So that will be a pullback from the last earnings report. And a year ago, they were doing $337 earnings per share. So I think they could maybe beat earnings but miss revenue. So I think this is our scenario right here. 310. That's where I would expect it to stay above for tomorrow. Micron, this is my outline for that trade too, which we'll get into after we get this Lulu down. I'm going to have to go to Aries to get a good bid-ask spread for it because I know Robinhood's going to cheat me on it. So let's see. All right, so we're going to go with this week's expiration since this is the Tuesday earnings. So we got Wednesday, Thursday, Friday for this to play out. It's going to be a put credit spread, assuming it'll stay above 310. And right now that's paying $1 to $1.10. That's kind of cheap for a 250 spread. That means we're risking 150 to make 100 here. I'm almost more tempted to take the downside for this trade. But in that case, they would have to... in that case, they would have to miss earnings, beat revenue, which would lead them down to 305. I just feel like this is the most likely scenario with the 310. But that pay is just not good enough for my liking. We can check out Micron in the meantime. MU, so their expected earnings per share is negative 76 cents. or negative 78 cents. And then $3.74 billion of revenue. Their latest earnings came in at negative 4 cents, and they're expecting them to go all the way down to negative 78. That would be a pretty steep drop for earnings. And then revenue is expected at $3.74 billion. So I think that they could maybe beat their earnings, maybe miss revenue, which would keep the stock above 58. So we'll see if we can get a better risk reward ratio out of this versus what we're seeing for Lulu right now. It is down today, so you might get a little bit of extra credit. Same expiration date for the 31st, this Friday. Sell the 58, buy the 57. Well, that is all of the different options that I was looking at. Okay. Let me refresh the page. Okay, it's paying $15 or $14 for a 50-cent spread. So that's a worse risk reward ratio. Let's widen it to 57 instead of 57.50. That's 26. So a 3-to-1 risk reward ratio, whereas Lulu was only a 1.5 to 1. So Lulu would be the better of the two picks here. And assuming that it's going to stay above 310, I'll actually go wider with the strike prices and do $5 instead of $2.50. Putting up more collateral, but I'll get more credit for it. Let's see, 310, 305. And this is paying 205 for 300 risk. Okay. I'll take that. Looks like the markets are currently pulling back. IWM is back down to 173.38. SPY is now at 398.14. We could possibly wait a little bit longer to get into this trade and get it at a better price. Let's see, Lulu currently at 315.43. So another $5 down. 5 over 315 would be 1.5%. Not unreasonable to expect a day before their earnings. Oh, that bid just dropped on me to 190. That sucks. Yeah. Now the bid is up to 2. Okay, I'll take the 2. I'm not going to take 190. What they were offering before. I feel like that's too low. So I'll type in 2, see if I can get that credit. Oh, I actually got 223 credit on it. That's a nice surprise. I accidentally put 315, 310 instead of 310, 305. That's why I got so much more credit. But that's okay. That means our max risk is now down to 310 strike price, which is where I'm assuming it's going to stay above. But it is an at the money option now, which is a little bit more risky. All right. New options alert. This will be a swing trade. just opened a new 310, 315 Lulu put credit spread expiring the 31st. And I was able to get it at $2.23 credit. And I'll take a screenshot of this and just post that in the Discord. Expecting earnings beat, revenue miss, should keep the stock above 310. All right. Got that one now. Tesla 200 calls. Oh, Tesla. I can't believe that stock is trading at 200 again. How many times have we told y'all to stop going above 200? It's at 197 right now. The stock has been rejected by 200 so many times at this point. When doing credit spreads, do you sell a specific delta or do you see on the chart? I do it based on the chart analysis, on the price levels that I have drawn up. Delta is just a kind of a screenshot, or like it's like a point in time of what the probability and like how much the stock is going to, how much the option is going to move, because the delta is always going to be changing based on the gamma. So you can't really rely on it too much as a good indicator of the likelihood of your option expiring in the money or out of the money. Are strangles a safe play for earnings? I would say most of the time, no. If you're doing a strangle, you're going to overpay for it. But there's a way to know if you're overpaying for it or not, and that's through IV percentile. So you can pull up this study for Lulu, and currently the IV percentile is 36 compared to, sorry, that's IV rank. IV percentile is 53. So 47% of the time, implied volatility has been higher than it is right now ahead of their earnings report. So it's somewhat low. You could do a strangle on it, but you would need the stock to move in a pretty big way in order for that to be profitable. So say you did same expiration date, you're expecting the stock to move $26, and with a strangle you're doing a call to the upside, a put to the downside. So let's say you did 335 and then a 305 strangle. Or no, sorry, that's 20 points. So we would want 295. So you're paying 470 for a 295 put. Plus you're paying 575 for a 335 call. So in total, you're paying 375 plus 470. Or wait, no, I think it was 575. Yeah, 575 plus 470. In total, you're paying 1045, right? Which means that you need the stock to move that 1045 plus or minus the strike price you chose. So you need it to move To the downside, 295 minus this would be 284.55. And then to the upside, you would need it to move 335 plus that will be 345.45. Okay, and the expected move of the stock is $25 basically in either direction. So it's at 315 plus 25. It's only expected to move to 340, 290 to 340. So it's outside of that expected range, which will only happen about a third of the time. Why don't I take more leverage positions on higher probability trades? I mean, I would say that credit spreads are pretty high probability, and based on my earnings and trading around earnings, it's pretty good. And I do hedge my positions depending on what I'm trading. If I'm trading like SPY, you can't just be strictly bullish or bearish on it, obviously. So I do hedge my positions there, but whenever it comes to like earnings trades, I usually just go one direction. Otherwise, you're just going to pay way too much for it. What's the relationship between TNX, the 10-year treasury yield, and the stock market? So before, whenever treasury yields were going up, the stock market would come down, but it's actually kind of reversed that recently. To wherever the 10-year is going up now, that means people are selling out of bonds. That means that people have less fear of a recession. So whenever the 10-year is going up now, the stock market generally sees a rally out of it. I would say that QQQ would get the least love out of this rally, though, because whenever interest rates are going up, that means that it's going to cost the tech companies that need to borrow money more because of the higher interest rates. So QQQ is only up 0.5% today, whereas SPY is up 0.75%. So that's why you're seeing QQQ lagging behind. Gold is actually pulling back to 181. Interesting enough. The dollar is down slightly, 0.15%. That's what's been really weird, is the dollar hasn't been really following the moves that we see for the yields. Usually those go hand in hand with one another, but it could also be foreign exchange and how other central banks could be raising quicker than we are, which devalues our dollar. So that might be why you're seeing the dollar down even whenever the yields are going up recently. Let me get rid of my implied volatility percentile. Don't really need it anymore. Remove. All right. So it looks like IWM is pulling back from the high. Probably the same situation with other indexes. Yeah, QQ ended up going to the pre-market high, pulling back at the moment. And then SPY actually broke the pre-market high. So this one could end up going to 399. Not entirely convinced that SPY would manage its way up to 399 where it was before the Fed meeting, though. I think that there's still a lot of risk whenever it comes to the bank after the extra 25 basis point rate hike. Can I look at QQQ and give your inputs? Yeah, sure. If you're doing trades for indexes with short days to expiration, which one do I stick with and why? SPY, IWM, and QQQ, just because of liquidity. Sometimes I'll trade KRE, the regional bank ETF, if it's trading too high. Like whenever I was trading at 45, almost 46 this morning, you could have taken a 50 call credit spread and assume that it would come back down, just because every time that it reaches this level, it just continues to sell off. But for QQQ, currently this one's at $312. The support and resistance levels that I have currently are at 312, 309.85, 306.18, 304.43. Let me actually redo this though, because these are kind of old. So I'll usually start with a daily chart, just because this is the one that most people look at. And I'm going to look for either gaps in the market, or I'm going to look for large candles like this one right here, candle of significance. And then I'll draw the price analysis, or I'll do the price levels based on that. So let me go to this time frame here. Most recent. We had a gap up from Monday to Tuesday. So you'll take the low of this candle, which was 306.40. This would also be a candle of significance, which ended up being a support a couple days later. You could also use this gap in the market right here, but that is a little bit higher. So I'd probably call this 302. Nice round number too. Markets love to stick around round numbers. All right. I would take these gaps in the market, but they're pretty close to what we already have, so wouldn't really call them too relevant. So let's zoom out now. This would be a candle of significance here, since it's larger than most of the candles around it. I would probably put the average at 314 for that, roughly. And then you have a gap right here, right here. And it's been a long time since we've been at these price levels too, which makes it a little bit harder to get up here. But the high for this candle was 318.74. And then the low for this candle was 322.08. So those are your support and resistance levels that are important as of right now. So it's trading at 312. You have resistance at 314, 318.74, 322.08, and then supports at 306.40 and 302. By the end of the week, you can go to the trade tab and it'll tell you how much QQQ is expected to move. So by the 31st, this expiration date, QQQ is expected to move 7.48, or basically $7.50 in either direction. Currently is trading at 311.50. So you take 7.5 plus that, you get 319, and then if you subtract 7.5, you get 304. So 304 to 319 is your expected range for this week. $319 to $304. So within this box, that's where it's expected to stay. It can always go outside of the box. There's roughly about a 1 in 3 chance of that happening. But yeah. Got a 310 call for QQQ expiring 3/29. Pretty short expiration date. I personally don't like trading such short expiration dates whenever I'm going long in an option. I would prefer to go out a few weeks, but you know, the longer you go out in your expiration, the more that you're going to pay for it. So something important to keep in mind. But my personal opinion, spreads are probably the best just because they can reduce your cost and you can extend the expiration date out. So that's why I mostly trade them. But yeah, gold saw a very large gap down this morning. My assumption is that it could go down to 178 by the end of the week, and this gap down makes it seem a little bit more likely. If the recession fears are off, then gold would definitely see a nice little pullback down to the high 170s, so that might end up playing out. Almost tempted to take a 399 call debit spread for SPY, but I know that the price for it's going to be high considering that we're already trading for 398. So not the best idea in terms of risk reward. And you could always flip that into a call credit spread if you think it's too expensive. But I've already got a call credit spread on IWM, assuming that it's going to be below 173 on Wednesday. So I've already got a similar position to that open right now. How do I determine how close to the money to buy puts or calls or debit spreads? I mean, I do it mostly based on my price levels, but sometimes, you know, I'll just choose a few dollars away, depending on how long it is. I would say, you know, obviously the longer out you go, the more that the stock can move. So it really depends on my expiration date. So I ended up choosing a 331 expiration, assuming that SPY is going to pull all the way back to 386. Right? It's trading at 398 right now, which is a $12 drop is what I'm anticipating. But since I have a full 4 or 5 days until expiration, that makes that trade a little bit more likely depending on if volatility sparks back up again. Whereas if I was doing, say, a daily expiration, obviously SPY isn't going to move 3% in a single day. In that case, you might see, you know, that 399 mark by the end of the day, or you could see it pulling back. I don't have any price levels here yet. But maybe you see it pulling back all the way down to this candle right here, down to 395, 396, right? So for 0 data expirations, I would only put your strike price like $2-3 away. Expect like a 0.5% to a 0.75% move. And then if you're going longer in expiration date, then you could choose, 2-3% way. What is a good percent payback for an option? I mean, it really depends on the option itself. Most of the time, I try to go for like a 1.5 to 1 risk reward ratio. So for every $100 I risk, for every $150 I risk, I want to make 100. That's usually for credit spreads. For debit spreads, it's usually a 1 to 3 risk reward ratio. So for every $100 I risk, I want to make 300, or I want to make 300 out of it, right? So it really depends on what kind of trade it is. For debit spreads, I usually try to buy them for a $1 spread, or the $1 difference between the strike prices. I want to buy them between 30 and 40 cents. For credit spreads, I usually try to sell them for anywhere between 20 and 40 cents. Probably pull back using the Fibonacci and 200 moving average. Not sure of any close Fibonacci levels. The only Fibonacci that I have is going back to COVID to the top of the bull market. So those aren't really relevant right now. I think it's like, $380. And then the top fib is 418.21. So they're long away from where we're trading right now. With your analysis for QQQ, do an iron condor for the end of the week, could do that. But the payout for it probably wouldn't be great, just because it's not expected to move outside of that. But we can always explore that. So 304 to 319 is the range that we're expecting. So if you make an iron condor out of that, the payout is probably going to be, my guess, below or right at 20 cents. So we would sell a 304 put. Oh, that's for today's expiration. Let's extend it to the 31st. We would sell the 304, buy the 303, and then for the calls, we would sell the 319. And then buy the 320. Oh, we actually get paid 32 cents credit for that trade. So it's not a bad idea if you expect it to be a pretty boring week. And if you don't expect us to go outside of this risk range. I'm more tilted to the bearish side, and I think SPY could end up pulling back to 386, which is right about where the end of this week's risk range is, just because of how choppy the markets have been, considering that it's trading at 399 right now. I think that there's quite a bit of risk to the downside for SPY this week, especially if you get, another bank issue sometime by the end of the week. That could always re-spark the fears of recession, end up in the markets crashing back down. So if anything, I would probably do a call credit spread for QQQ rather than an iron condor. But, you're getting paid 34 cents. So if you're neutral on the market, then it might not be a bad trade for you. Let's see if there's any news coming out this morning. S&P Global says the biggest risk to sovereign credit ratings remains central banks raising interest rates more than expected. Says France pension reform looks sensible, could be beneficial for the rating. Let me check my news app and see if there's any other headlines that we're missing. Biden administration expected to make final offer to Mexico negotiators, hoping to break energy dispute stalemate. JSPR developed range pattern on daily chart. Not really interested in technical analysis news, but Micron is pulling back 0.85% this morning. Could make the put credit spreads on that pretty tasty. Why do I always do $1 instead of 5 or 10? You get the best credit out of it, the best risk reward ratio. The closer you are with your strike prices, the better the risk reward ratio, just because you're going to make the break even less in your favor. All right. Yeah, so the 10-year is still up this morning and actually still headed higher right now. So people are selling out of their bonds, selling out of gold. So yeah, not seeing the recession fears that we were seeing the last couple of weeks, which is bullish, but SPY's just having a really hard time cracking that 399 level from before the Fed meeting. Almost tempted to make a 399 call credit spread. Let's check our studies. RSI, MACD. RSI is going below 50. So this could be the start to a reversal here. MACD is, both lines are going negative right now. So that could be a decent setup. $0.35 in credit is what it's paying for right now. That's pretty good. Let's see. .34, 35. The fundamentals are going against me right now, though. With the 10-year up, gold down. The reversal of that sentiment, that recession sentiment, could end up making this a turnaround pretty quick. But I think it might still be worth it. Let's see. It's going for 31 cents, so they just dropped the bid on me by 4 cents, making that risk reward ratio less appealing. All right. I got it at 30 cents. Assuming SPY is going to stay below 3.99. I just don't see a reason why SPY would go above 3.99 for today, considering that's where we were right before the Fed. Just opened a new SPY call credit spread expiring today. Today is the 27th. This looks like a very similar setup to what I saw with QQQ last week, though. Whenever I was peaking at 314 and then ended up pulling back for the rest of the day. Yeah, I could have got this for an extra 5-cent credit. But that pullback seems pretty promising now. Based on the technicals, below 50 on the RSI, both of the lines for the MACD are going negative right now. We'll see how the rest of the market ends up playing out. Looks like QQQ is definitely the first one to pull back down to positive 0.2%. And then I would want to watch IWM, see if that one goes negative too. Usually IWM will kind of lead the way, but it looks like SPY and QQQ might actually be leading the markets so far this morning. There we go. We got that flush down. We could. Did we get a gap up this morning? Yeah, we did get a gap up this morning. So we could end up pulling back to like 395.75 just to fill that gap. It could also take a couple of days to realize that. But the top on Friday was 395.75, so that might be the mark to look out for later today. make sure to log that in. Okay. Open it today. I'm gonna close it today. SPY call credit. It's a bearish neutral trade. Expiration is today. 400, 399. I opened 6 at 30. But yeah, I'd say solid chance we'd stay below 399 today, unless something changes by the end of the day, and if there's any kind of news. But I don't think that we have any Fed speakers or really any economic news coming out, so probably going to stay intact. How do I determine how many contracts to do? It depends on how much risk I'm willing to take on. So for that one, I was willing to take on more risk than I usually would. Usually I risk about 300, but for that one, it seems more certain with the 399 level being a resistance. It's been a resistance for the last couple of weeks. And then the technicals kind of confirmed it with RSI and MACD both negative. So I took on 6 contracts, which means that I'm risking 70 times 6, $420, versus my usual risk is about 300 on average. Yeah, so unless there's any kind of major news updates by the end of today, that trade is probably going to work well. Hopefully we see a tick up for the VIX, but that one doesn't seem too likely unless we get a decent drop. Yesterday, or Friday, I guess, this was at 25. It's pretty crazy that it dropped to 21. But that's the volatility of the VIX for you, like we were talking about earlier with VVIX. Still at 97, so you're expected to see a lot of movement both up and down for the VIX. does seem like we're getting a little bit of support from SPY at this 397.50 level. Keeps seeming to want to get bid up right when it hits that. Currently at 397.62, so we'll see if that holds or not. Trend is definitely starting to be down though. Oh man. What do I see with Nvidia? I feel like Nvidia is probably the most pricey, not the most pricey, but one of the most pricey stocks in the market. At 268, it's trading at like 150 or 160 price to earnings. So I think that this one has a long way to come down, but it does have that hype effect to it. So until that hype kind of dies off, you're probably going to stay trading up at these price levels above like 260. So it's kind of hard to say, the timing of that, when the hype would die off. But I do think that it has a long way to pull back. Probably down to like 240 at least. Maybe even back down to 220 to 230. So I would say the best bet for that would probably be a Leaps put option. That way you give it enough time for that hype to die off. But, I mean, if you're trading a $270 stock, I can't imagine that the put options, Leaps put options for that would be very cheap. Let's see. If I go with 2025 expiration, January 2025, you're paying $6,000 for an at the money or 270 put right now, which means that your break even is all the way down at 210. If you want a 230 break even, you need to pay $8,700 for a 315 put. So I do think that it's going to come down, but it needs enough time for it. I would say maybe 6 months is probably enough, though. Let's see, October. I would probably give it 12 months, actually. So March of 2024, if they have it. No, they only have January and June of 2024. So if you go with June 2024, they're a little bit cheaper. $5,500 for a 270 put, making your break even 217. So that could be a better trade to take on. But yeah, right now it's definitely hanging up there. So you could trade bullish or neutral in the short term, maybe assuming that it's going to stay above 260 until something ends up breaking, and the timing of that really uncertain. But I would say next couple weeks you might be fine staying above 260, but then after that I would imagine that it would make its way back down to around 230 or so. But SPY is pulling back, QQQ is pulling back. QQQ is almost in the negative, only up 0.1% now. SPY down to 397.20. So those call credit spreads that I open ought to be making a decent profit. Currently up $30. I opened 6 of them at 30. Now they're going for 25. I'm going to set an alert for if we go back down and fill that gap to $3.95.75. It's $1.25 away at this point, so not too far to reach. Surprisingly, IWM is leading the way right now at 0.7%. I risk about 1% on these trades. Is this how I make most of my return on investment? Yeah, I would say. So my account size is 31,000. I usually risk about 300 per trade, so roughly about 1%. And then the returns so far this year, let's see. Discord, go to my drive. I made 1,400 in February. I'm up by 84 in March so far and down 755 for January. This trade will raise me another $200 or so that will raise me to like 300. So net for the year would be what, 1,400 minus 700. I'd call it 700 for 30,000 total capital. But, I'm only using 300 risk per trade, so not really risking too much. I could always risk more, but personally, I'm just a very risk-adverse person. Like, I don't like putting $1,000 on a single trade, especially with options, just because of how easily they can lose all their value and how quickly. And I do have regular stocks too. Like Tesla, I have 30 shares of Tesla, almost 200 shares of Fulgent Genetics, got 500 shares of Evixi. It's not really a long-term play. Then McDonald's, I have a fractional share of it just because it was free. Kind of actually want to invest in McDonald's. Just because if we do go into a recession, that's probably going to be one of the ones that does better. Usually your staples, fast food, drugs, alcohol, things of that nature will all do better during a recession. So might want to start pulling into those. And then gold tends to outperform too. I already did a gold trade, but I wouldn't be opposed to another one. It's at 182 right now for GLD, which is a little bit pricey. I would want to probably buy it at like 175 or 178. Ampex is a good buy hold because of the battery nudes. I haven't heard of Ampex. Let's see, AMPX. Amprius Technologies, analyst expectations for the future of the company. Not a lot of analysts for the stock, so that's a little bit concerning. It's trading at $7.30. Let's see what the market cap for it is. AMPX. Probably a small cap, just based on the number of analysts covering it. 615 million market cap. So yeah, it's a small cap company. They're pretty close to breaking even for their earnings, though. So that does present a pretty good opportunity if they're able to turn that around. Let's see what the news was, if I can find anything on it. Oppenheimer's setting a $15 price target. That's crazy. They're expecting it to double. Let me see if I can find that battery news that you're speaking of. AMPX. It's down 2.7% today. I don't have a news feed for it. Welcome, Robert. Oh, the Texas manufacturing. Is that Dallas manufacturing, I'm guessing? Another manufacturing index being negative. No surprise there. Let's see. Economic calendar. I didn't know we had any economic news coming out. Yeah, the Dallas Fed Manufacturing Business Index. Down 15.7% versus negative 13.5% last time. I don't know if that's percentages, actually. I think it's just a number. But manufacturing has been in the negative for pretty much all of the different Fed branches for like the last year, basically. So not really too surprising there. That is inflationary. If manufacturing is pulling back, that means there's going to be less supply. And if there's the same amount of demand, then prices would go up based on supply and demand. So that would be inflationary. So you could see a rise out of the dollar, but it is specific to just Dallas. So it's not going to have much impact. Let's see. Yeah, the dollar index is at 103, catching a slight uptick, but not really much. The big event today is Fed Jefferson speaking at 5 p.m., but it's only a one-star event. It is after hours, too, so people might not be paying too much attention to it. Let's see. This is the FOMC countdown. So the FOMC countdown is raising the odds of 25 basis point rate hike. It was 16% on Friday, and now it's at 37%. But I was looking at the Fed speech calendar. Today's the 27th. Fed Jefferson will be speaking about the implementation and transmission of monetary policy, so it might have a little bit of weight to it. And then we'll look at the Fed cheat sheet, see where Jefferson stands in terms of doves and hawks, and if they're a voting member. They are a voting member and slightly on the hawkish side. But since it's at 5 p.m., not many people are going to be paying attention to it. So that's probably why you got that one-star rating instead of the 2 or 3 stars. I think the Philly Fed Manufacturing Index has a little bit more weight to it. At least in terms of the stars that they give it. Those call credit spreads, assuming SPY under 399, are paying $54 in profit right now. Could take that now. Let's see. SPY's trading at 396.60. We're almost down to that 395.75 mark. That's where I'm wanting to take profit, but getting down to that might not happen. IWM is really still holding, though. Still up 0.7. Here's some news. Traders are betting on a hawkish Fed as the odds revert back to 50%. We're looking at 38%. So it actually ended up pulling back from that. But yeah, looks like rates are expected to go up. That's why you saw the interest rates going up with TNX this morning. More rate hikes to come. I mean, as long as there's not another bank failure between now and the May meeting, I don't think that you're going to get the Fed backing off. And I don't think that the Fed is really going to back off even if there is a bank failure, depending on the size of it. I mean, if it's something like Citigroup or JP Morgan, one of the big banks, then yes, I do think that they would end up pulling back on their inflation mandate and cutting rates. But if it's another regional bank, I don't think that they really give a shit. If it's not one of their political donors, they're probably not going to help them. Yeah, I had some pretty good timing for this one right before that drop. Luckily enough. Luckily I didn't wait on it too. Wow, we got some news from Biden speaking. President Biden says if Republicans' energy bill is presented in current form, he would veto. He has been all for vetoing recently. Thought we had a president that was willing to work with the other team, but I guess not. That's what he was pitching in his debates, at least. That he would try to be a bipartisan president, but not the case. Am I going to close it or let it expire? Thinking about closing it at $395.75 price level. But obviously, if we end up pulling below that pretty quickly, then I would probably hold on to it just because recovering back to $3.99 would be a long shot. It would have to go up, 0.75% by the end of the day, which could happen if there's any news that's bullish, but my guess probably not. So I think I might hold it. Try to get as much profit out of it as I can. I might hold it till like 2 p.m. or something like that and see how much profit I can get out of it. New fast charge lithium battery. Is that for electric vehicles, I'm assuming? Let me see. Amprius Technologies battery. Fast charge. Lithium. Extreme fast charging, 0 to 80% in 6 minutes. 2.75 amp hour cells are about an order of magnitude too small for electric vehicles, but probably just a matter of time for them to scale up. That would be interesting if you could get a 0 to 80 in 6 minutes with an electric vehicle, but I would guess that the amp hours would need to be much larger. Yeah, it's a order of magnitude too small. I don't know how many amp hours you need for a electric vehicle. Let's see. How many amp hours for Tesla? 26. So yeah, they would need 10 times the amount of amp hours. And I think Tesla's charge 0 to 80% in, what is it, like 30 minutes or something like that? Maybe an hour. So it would be roughly in line with what Tesla is doing. Thank you. If it is 1-to-1. But yeah, I think that's all the trades that I'll make for today. SPY is down to 396.36, so the 399.400 call credit spread is doing pretty well. VIX is making a comeback to 22 right now, so we might see a little bit of a rise there. Again, volatility is volatile right now, so could go either way. But I will catch y'all tomorrow at 9:30. See you, everybody.